We have Nirav Seth joining us now for a take this morning. Nirav, great to speak with you. Nifty is
Thank you.
buoyant, markets are buoyant, but definitely not all the way through. There still seems to be a few question marks to see how this tariff situation ends. But do you see it as a positive, the kind of exchange between the two leaders this morning on social media?
Absolutely. So, you're not close to, let's say, a resolution. Maybe that's a couple of months away, but you can certainly get a sense that there is some sort of de-escalation. That is what the markets are looking at. So, you'll sit down on incremental information. See, the problem is that we exactly know what is at the end of the valley, right? We don't know what is there in between, right? So, it's just not possible that the largest democracy in the world and the richest democracy in the world will not sit together, right? So, it doesn't work that way. It's just that uh, we know the end, we know the path to the end. And therefore, your guess is as good as mine. But there is an attempt at de-escalation, so that's positive.
Yeah. Nirav, what would the playbook be? Because while tariffs are an unknown, everything else or a lot of things that can be done have been done. We had this big conclave yesterday wherein a lot of clarity came in around GST as well, more reforms in store as well. Does this set the stage for the markets to, if not rally, at least not correct uh, a lot? Because India has seriously underperformed a lot of its Asian and EM peers in the last 6 months.
Yeah, you can say that you underperformed because my earnings are up just about 7%. Or you can also make a case that, a part of that is correction for probably superior returns in the past. None of us believe that, there should be linear returns in the market going forward. Uh, Coming back to GST, it's a phenomenal move, right? And the stocks have reacted, right? So if you look at the auto sector, I think that is up 9-10%. The stocks are up some 12-13%. The consumer stocks. Uh, and my personal view is that the volume elasticity for most of the sectors will more than compensate for the reduction in prices. India remains a terribly price sensitive market in almost all the categories. So, barring cement, where obviously it doesn't impact volume so much, it's a great move. And I'm also not very sure that I would not see these reform as a sort of a knee-jerk reaction to what has happened because of tariffs. I always believed that the current incumbent government uh, runs with a 20-year time frame, right? So you started with income tax reforms. You wanted the GST taxation to stabilize. Then you rationalize the rates, and the process will continue over a period of time. The only thing that I don't necessarily like is that we are too fiscally conservative, we are too monetarily conservative, which means that we are away from our exponential growth rates of 8%. But you can't take away 6.5% growth that we are growing at.
Agree. No, Nirav, even if the clarity wouldn't have come in from the government that this is not a reaction, logistically it's impossible to come up with a reform like this in a matter of a month or month and a half or 2 months, right? It
Absolutely.
really takes some doing. So I'm completely agree with that. The question, Nirav, is that yesterday when we spoke to a bunch of policymakers, but we also spoke to the chief economic advisor, who mentioned that with the 7.8 surprise that has come in, he believes that growth per se in India is trending higher, and if all things take shape and form, if indeed the tariff issue goes away, then don't be surprised if growth actually goes higher than the best case estimates by people. Now my question to you is, if indeed we have a strong growth, could it usher in a strong earnings growth momentum which can help the markets rally further?
So I would look at profits to GDP ratio, right? So it's not that a lot of the sectors in our country are not a part of the index. And when we talk about markets, we largely talk about the Nifty, right? So we've discussed about this earlier that a lot of the investments are happening outside the listed space. So when you talk about solar, when you talk about green hydrogen, when you talk about so many things, data centers, large part of that is happening. The entire GCC sector is not a part of the Nifty index, right? And that's a big chunk that is happening. Real estate, you've got handful of companies that are listed in the country. Uh, uh, so, see, I I tend to look at credit growth as a great indicator of my potential GDP growth rate. And that to me is a bit disappointing. We sort of over tightened last year. Even today, my credit growth is about 10.1%. Importantly, last 10, 15 years, my credit to GDP ratio is flat at about 60 to 64%. Now, and that's my pain point, right? So, uh, we don't have animal spirits in the true fashion that we want, right? So, I think the interest rates have to be far lower. The credit growth rate has to be far higher because the macroeconomic situation is very well positioned, right? Your current account deficit, your inflation,
No, no, get your
stuff like
point.
that.
Get your point entirely on. I get your point entirely on animal spirits, Nirav. In fact, that's one of the questions that we asked all of corporate India at the GST conclave yesterday. That the ground is laid out. When are you going to come in and actually put in the capex that is
Absolutely.
required? And they talked a lot about some niggles on the state level as well. They said yes, central rules are fine, but it is states when if you want to set up a plant, you want to do something, it needs to be made easier. All of that and more through the day. Nirav, thank you.